Hi guys, this is Marcille, and in this video I'm going to show you how I use the average true range indicator for my simple system. You can see that I have two SMAs in my system. I use the 8-period SMA, which is this pink line, and I use the 21-period SMA, which is over here. So what I did was I just added the ATR 14-period ATR over here, and I placed a level at 0.001, and this will just serve as a visual signal for me to tell if the ATR has reached a low level, and that's when I'm going to start looking for signals for my trade. So let me just run through the buy trade rules of my system as I show you an example trade on this chart over here. As you can see, I'm using the Euro USD 15-minute chart. First part of my buy trade rules is to make sure that my 14-period ATR must be 0.0010 or less before looking for signals. And you can see that over here, my ATR has reached that level. And so this is when I start waiting for my other conditions to be met before I enter the trade. So the second part of my rules is to wait for my price to be above the 8 SMA and the 8 SMA to cross above the 21 SMA. And I should check the 4-hour chart. You can see along my vertical line that the price was above 8 SMA and 8 SMA was above my 21 SMA. So I'm going to my 1-hour chart and check there also that the price is above 8 SMA and 8 SMA is above my 21-period SMA. And then I'll just go back to my 15-minute chart, and this is when I'll start looking for point 3 to be met. And point 3 is identify the most recent lowest low or swing low, and then I'll add 3 ATRs from the closing price of that candle, and then I'll wait for the price to close above that level before entering the trade. And so I decided to use this candle over here and to use the closing price of that candle as my basis for my entry. So if we look at it, our closing price of this candle is at 1.29729 and our ATR is 0.0013. And so I just enter that in my Excel sheet. As you can see, this is the closing price, this is the ATR, and this will be computed automatically for me, the 3 ATRs above my recent lowest close. And so at 1.30299, let's take a look over here. This is where my price should reach or should exceed before entering the trade. And if you can see in this candle over here, this is when my point 2 and my point 3 condition have been met, and so I would enter the trade in the next candle over here. So I should be entered at the open of this candle, which is at 1.30243. What I'm going to do is to set my stop loss now since I've entered the trade. So I will take the ATR reading of this candle, which is 0.0019. I'll multiply that by 3 and deduct it from my entry price. And you can see it over here. So 3 ATRs from my buy entry price is at 1.29673. Let's have a look. So just in case this trade goes against me, then I'll be stopped here. Alright, once we have entered the trade and we have set our stop loss, what I do is I just go with the flow of the trend and wait for my SMAs to cross, and that's the point at which I start calculating for my exit price. I take into consideration the closing price of the highest candle or the highest close. And so if you can see over here, we have a cross of the SMAs. So I will take this candle and base my exit on the closing of that candle. So I'll take the ATR reading from there, 0.0018, multiply it by 3, and deduct it from the closing price. And you can see over here, this is the highest close, and this is the ATR. And so 3 ATRs below the highest close is at 1.30843. Let's take a look. This is where I'm supposed to wait for my price to reach before I exit the trade. I do this because this one gives me enough allowance for my price movement. Just in case my price is just retracing at this moment, then I'd have enough space for it to do so before being exited from the trade. Okay, so let's move on. And I was right. As you can see, the price continued moving up and we wouldn't exit the trade over here. And so we can see another high forming over here in this candle. Let's put a vertical line there. Alright, and you can see again that the SMAs have crossed over here, so I'll compute 3 ATRs deducted from the closing price of this candle, and that's when I'm going to watch my price before exiting the trade. So the closing price here is at 1.33754 and the ATR is 0.0027. So if we go back to my Excel sheet, you can see that this is the closing price of the candle we just looked at. This is the ATR, and right here is where I'm supposed to wait for my price to reach before exiting. So if we look at that, it should be over here. We have quite a wide space here because our ATR has adjusted based on the price movement, and so since the market has become volatile, then our ATR increased, and thus giving us enough space for price movement if, for example, this is just a price retracement. So let's move on. And as you can see that we have formed another new high over here, and so we'll mark that. We'll take the closing price 1.34406 and the ATR, which is 0.0020, and we'll plot it here in our Excel sheet. So 3 ATRs from our highest close is 1.33806. So over here, it should be right there. And you can see that our SMA is also crossed over there. And so once it crosses, then we exit the trade at the open of the next candle, which is over here. So if you want to know how much we get from this trade, let's take a look. Let's enter our exit price over here, which is 1.33762. And then we'll copy this entry price. And you can see that we got 351 pips from this trade. Now in this system, I just started with my simple moving averages. But ever since I added the 14-period ATR, it has really saved me a lot from early exits, and it has given me so much profits as compared to my original system. Let me show you what I mean. Let's go back to our trades. Okay. So as you can see, the ATR has saved me twice from exiting too early in this trade. And as you can see, when I exited, the trend had already started to go down. So now you see how I use the ATR to my advantage. I hope that you've learned something from this video. I hope that you'd apply it in your own trading. Thank you very much for watching. This is Marcille once again.